Hello and welcome to the Daily Aus. I'm Sam.
I'm Emma.
This week, Federal Treasurer Jim Chalmers said the peak of inflation has passed and the worst of the recent economic turbulence is behind us. Yesterday, new consumer data from NAB echoed that sentiment, reporting more optimism amongst Australian consumers. But does that match the reality for young Australians? How are we going to know when the cost of living crisis is over? On today's episode, I'm going to be joined by Greg Jericho. He's the Australia Institute's chief economist to discuss what this new outlook means for you.
So, Sam, we have spent many hours on this podcast talking about the cost of living crisis, how it's being felt in the housing market, at supermarket checkouts, at the petrol bowser. But between comments from the Federal Treasurer Jim Chalmers and some new economic data from NAB, there's now a bit of a sense of optimism that we aren't very familiar with hearing about. Are you surprised?
Yeah, it's kind of a good news economic episode today, which feels funny in 2024. I mean, I feel like the cost of living crisis still is on the front of everyone's minds.
Yeah.
I expect it to be a big issue in the upcoming election that Australia is set to have in the first half of 2025. But I thought I'd address the fact that we have a positive sentiment from the Treasurer and we've got some healthy economic data about consumer confidence. And I wanted to break that down with the Australia Institute's Greg Jericho. He's their chief economist. And he has a habit of making these things make a bit more sense. So here's that chat. Greg, thanks for joining us on the Daily Aus this morning.
Pleasure to be here, Sam.
So I've got a report in front of me that says that Jim Chalmers, Australia's Treasurer, says that the worst is behind us. I've got some new data from NAB that says that consumers are feeling more confident. In your opinion, do you think the cost of living crisis is over?
Look, it's over in the sense that, as Jim Chalmers says, the worst is behind us. The problem with the cost of living and inflation is we sort of talk about it in terms of annual growth, but that doesn't mean we can forget what has happened before. So Jim Chalmers is right. Inflation, the cost of living, the worst is behind us. That doesn't mean we're still not feeling pain of those past couple of years. But I think it's right that consumers should feel a bit more confident because there's certainly no sense that we're going to have inflation rising like it was sort of in 2022 and 2023.
So what are the big factors that have led to that reduction in inflation since that 22-23 time spot?
Well, I mean, this is a very contested space, but certainly our view has been that, what caused it in the first place? And what caused it was big supply side issues coming out of the pandemic. We also had soaring prices due to Russia's invasion of Ukraine, soaring prices in things like gas, petrol, also things like wheat and fertilizer, which were a bit sort of under the radar, but were certainly raising the cost of things. And also because of those two factors together of the supply side issues and the invasion, there was this general sense around the world of inflation rising, of prices going up. And a lot of companies around the world, and Australia was not excluded from this, that had a bit of market power were going, oh, now's a good time to raise prices because everyone kind of thinks that prices are going up. And so what we saw in 2022 and 2023 is those company profits rising quite solidly, even in the non-mining sector here in Australia. And what we've seen over the past year or so is, one, those supply side issues have pretty much cleaned up. We're fairly well past the pandemic now. While the Russia's invasion of Ukraine is going on, the impact on prices has certainly abated. And overall, there's been this real sort of close look on companies and how they're behaving. And what we're also seeing is that company profits are not growing as fast. And so kind of put those issues all together and it translates fairly nicely with inflation coming back down, because it was never a case that inflation was caused by us all having too much money, which is the old sort of 1970s style of inflation where everyone's getting huge, big wage rises. We've got stonks of cash and we're going out and spending like mad. We were not doing that at all, and yet prices were going up. And that's because companies were taking advantage of the situation. So kind of all those issues have kind of abated, and so it's sort of coming back to normal again.
It's an interesting chat we're having, Greg, because we know that for young Australians, especially, TDA's audience and those listening, prices haven't come down at supermarkets just yet. And there's still a serious anxiety around cost of living. So at what level in the economy do you think that this sentiment is coming through, if it's not coming through amongst younger Australians?
I mean, this goes to the real heart of the issue with inflation, that prices aren't going to come down. That's the problem. What's going to happen is they're not going to go up as fast. And when we talk about cost of living and inflation, we always talk in terms of annual growth. So at its peak, prices were rising around 8% a year. So everything on average that you're buying was 8% more expensive than it was a year before. Now, the most recent monthly one, it's back down to 2.7, 2.8. And so that's certainly down, but that doesn't mean that we can forget what has happened in the past. And so if you say, okay, what's happened in the past year? Well, everyone's wages on average have gone up around 3.5%, 4%. Prices have gone up around 3.5%, 4%. So basically, I can buy as much stuff as I could a year ago. Cost of living pressures aren't as bad. But that doesn't take away the fact that over the past sort of 4 years, the prices of everything has gone up around 18%, and in that time, wages have only gone up around 11%. So we've got back to a point where we're treading water, but it doesn't discount the fact that we've just had 2-3 years where we've been going backwards. And so even though, you might be reading these reports and the Treasurer and things are saying, the worst is behind us, that's fine. But it doesn't always mean we're in a great place. It means if you were struggling last year, you're still struggling. You just aren't struggling worse than you were a year ago, in a sense, on average. So that's always the tricky part with inflation and cost of living. And it's why when you hear politicians say, we've got it back down, things are good, on track, and it's like, yeah, but they're still a hell of a lot more expensive than they were 3 years ago. So unfortunately, we're not going to see prices come down. And this is what younger people will certainly be aware of, is it's the cost of the essential items that has risen over the past 2-3 years more than other things. And because younger workers are generally on lower incomes, and so most of their income is going towards rent, going towards food, bills, and so forth, they're the ones who have really hurt from the past couple of years, whereas your older people who have got savings, who have got good incomes, who spend more of their income on holidays, eating out, things that aren't essential, they haven't struggled as much because the prices of those things didn't go up as much as the prices of the essential items.
While I've got you, I was listening to the Dollars and Cents podcast you do for the Australia Institute and your discussion around the government's focus in the last kind of week or two on hidden fees and dynamic pricing. What do you think sits behind that focus for the government? They've got this good news of inflation coming down a little bit. They've turned the attention to, credit card, debit cards, flights, that kind of stuff. What do you think they're hoping to achieve?
Well, I think, they do want to be seen to be doing things to help people's cost of living. And this is not something that's going to have a dramatic effect on inflation, but it's something that people certainly notice and certainly hate. Even though prices might not be going up as much, people still notice the cost of things. And so if you can do anything as a government to take off some cost, I think that really hits home. But also it's just, it's a good thing to do. It's something that has been, I think, become more noticeable, and especially this dynamic pricing, which is kind of a newish thing in terms of especially concert tickets, the Australian Open and things like that, where it's just become quite absurd. And there's not always a lot the governments can do about overall inflation, but they can be fairly powerful at getting rid of some dodgy practices. So I think that's probably why they're doing it. And also just hopefully they're doing it because it's a good thing to do.
The opposition says that it's a distraction from some of the larger institutional economic issues impacting particularly young people. Housing is something that I know you've spent a lot of time thinking and writing about. What's your take on that response?
Well, I mean, I think, you can walk and chew gum at the same time. Just because you might be able to fix housing this week doesn't mean you shouldn't get rid of dynamic pricing and
Right.
debit charges. I mean, you should be doing both. And oppositions will always say that if a government does something, it's just a small distraction from this other big thing that the opposition wants to talk about. Well, sure, but would have they preferred that they didn't do this thing on dynamic pricing? It's a bit of a weak argument in my view. Certainly, you're right, the government still has lots to do on housing. And certainly if you look at the polls, people are not all that happy with how the government's been going on housing. But again, that doesn't discount that, or this doesn't mean that they shouldn't be doing other things that are good. And I certainly think this dynamic pricing and the debit card fees is certainly something that is well worth doing.
One more question, Greg, because I don't know if we're going to have the chance to chat before the US election. Regardless of the result, I'm sorry to bring it up. Is that a bit painful? Regardless of the result, do you think that Australians can expect to see an economic impact at home, depending on what happens there?
Well, I mean, it all depends. If Harris wins, we're not going to notice much of a change. If Trump wins, and it'll come down to what he does with tariffs. What's going to happen is when Trump gets in, governments all around the world are going to be going and trying to get a sweetheart deal. Now, what we have to do to get that, generally it's bend the knee to Trump and praise him and say how wonderful a leader he is or something like that probably. We'll probably get Greg Norman in again to play around a golf with him or something. If we get exempt from the tariff, the 20% tariff, that will be helpful, very helpful. But, if he goes full on and levies a 60% tariff on Chinese goods, 20% tariffs on most other nations, that's not going to be good for the global economy. Australia generally gets swept up in such things, especially because China is a major export market of ours, and so if China's own exports of manufactured goods that require iron ore and coal start to shrink, then that's going to affect us as well. But so that's kind of my big worry. If Harris gets in, we're not going to see much. She's much more concerned about the American economy rather than doing these major things that are going to hurt others.
It'll be interesting to touch base with you, regardless of the result, to see how those kind of scenarios are playing out. Greg Jericho from the Australia Institute, thank you so much for joining us.
No worries, Sam. Really good to chat.